Raising funding for your startup is a challenge. How much should you raise? Where do you find investors? And how do you pitch them? In this segment, How to Raise Funding for Your Startup, we'll answer those questions and more. Here are live outtakes with startup founders on how to raise funding. I hope you enjoy this episode. Hey everyone, today we're getting into the nitty-gritty of startup success and the investor game. Join me for a chat where I explain how 10 Capital works, connecting startups with investors through events, intros, and solid support. While many focus on FDA approval, our guest today shares a unique approach. They're laser focused on data collection to supercharge their U.S. data set. Join us as we unravel the strategy and discuss the vital role a well-defined FDA path plays in securing investor interest. Stick around as we unfold the investor playbook and chat about the crucial FDA path. Let's dive into this episode. Well, cool. Well, just wanted to learn more about where you are with your fundraise, and glad to tell you about 10 Capital. Where would you like to start?
Well, I think if you give me a read up on you a bit, I'd like to understand, a bit more in detail about your business model, about your added value and success.
Sure. So at heart, at 10 Capital, we're basically helping you find more investors. We do investor relations and introductions, taking your deck out to our network. We have 20,000, and we're building a list of interested investors. We usually get 300 to 400 saying they're interested, although it's just superficially interested. And then we're going through the process of giving them updates about the deal. And then we're inviting them to hear you pitch in our online events. Now they are at 1 to 3 p.m. U.S. Central Time. So that's going to be a bit late for you if you wanted to join. It's 9, 10, 11 o'clock, but we've had people do that before, unless you have somebody here on the U.S. time zone. A lot of people have someone here in New York or something that's doing that type of work for you. But you have 15 minutes to pitch, answer questions. We do several of those. Then we start doing custom events. We invite thought leaders to come out and talk about what's going on in your space. And that attracts more investors into the Zoom call. These are all online. After we do a series of events, we then start going through our network and we start applying to angel groups and syndicate funds and micro VCs that would fit. We're helping you fill out the application form and going through their process because they've got a gated process we have to go through. Like I say, it's investor relations. After you get about the second month, middle of the second, third month, we start working on closing the investors who have expressed interest. And we find that we can schedule in-person meetings to help close. Once you have an introduction, you can take them to close if you like. That can be easily done over Zoom if it's a $25,000, $50K check. That can be harder if it's $100,000 or $250,000 check because they want to know more about you. So somebody's getting on a plane to go meet the other person to, close the deal, so to speak, explain how it works and how the technology and so forth works. So we often set up in-person dinners and lunches in the third month. On average, people get $500,000 worth of introductions out of it. Some get more if they have more updates. We look for updates on sales, team, product, and fundraise, what's happening in the deal. If there's the FDA path, well, then it's not revenue. It's where you're doing on the FDA path. How are you making progress toward the FDA approval process? I don't know where you are with it, but that's how we work. We're a monthly retainer. It's $3K per month for a 3-month commitment. And after that, it goes month to month. Some people bring us in at the middle of the campaign and the end, and you can do it in 3 months with what's left. Most people have raised some money already when they come to us, but if not, we can take people at the beginning. We start with convertible notes and go out to start raising money, get the ball rolling, and looking for the lead investor who might come in. It always helps if you have some money already raised from other people to sign up a lead investor. So I think it's a positive there. So we're not a broker. There's no back end fee. It's just that fee.
As well.
What's that?
You do safes and convertibles as well.
Well, I like convertible notes. I think they're more familiar to investors. Safe notes are work also, but you have to have a valuation cap and it has to be a post-money safe. It cannot be a pre-money. The investors have figured out that changes their ownership dramatically with its pre-money. So, but safe notes and convertible notes are basically doing the same thing for us. They're getting people in the deal without having to set the valuation, and we do that a lot. And so that's how we work. Any questions about 10 and how we work?
So 3K for 3 months and anything else?
If we do an in-person dinner and we have to rent a dining room, a private dining room, 10, 15 people, we would have to pay for the food in the room. But that's the only other fee that comes in. There's no broker fee. There's no success fee. There's none of that. I started 3 angel networks in Texas back in the 2000s and found angel groups and VC funds, of which I had a lot, do not allow brokers in the deal for the most part, and did not want to lose my investor network. So I went the retainer model. And so that's how we got to this place. Cool.
So let me maybe ask you a bit of a direct questions. I'll give you a kind of a very short, if I won't go into the pitch and everything now, I'll just give you a kind of a overview. We do vocal biomarkers, by the way. As you will understand, we are able to prevent a large number of strokes based on a person's voice. We've got CE approval already, the local Israeli approval as well, peer-reviewed journal. We've got different ISOs. We've got patents already granted. And we are in the midst now of doing 2 pilots, one in Europe and one in Singapore. One with a partner, Boston Scientific and Philips in Europe, the other one with the Temasek Foundation and the Singapore Ministry of Health. Those are the 2 pilots. That's where we focused as I said, is actually detecting atrial fibrillation, a major cause of stroke, other complications. And then we're moving on to other vocal biomarkers. And the US for us, because it's a different kind of product. And what I mean by that, the first product we've done and that we got approved in Europe is say the letter A for 5 seconds twice a day, basically using signal processing and deep learning. And the same product is for Asia, while in the US, we're looking to do free speech. So we got a LOI with the Mayo Clinic. We got tier 1 US electrophysiologists that have invested money into the company as well. And we've got a good network there. We've done a kind of a regulatory assessment for the FDA, and we've got Bayer, the pharmaceutical company, investing in us, and AXA. You probably know AXA, the European insurance, that did a seed investment. So our focus at present, when we're talking about smaller money and not like a $10 million investment, is not focused so much on the US. And the question is, how does that actually affect the ability to raise in the US? Seeing that our focus initially is not there.
So what FDA path are you on?
So we need money for the FDA path. We need to do a data collection to enhance the data we've got in the US. And for that, we need a good few $1 million. What we're aiming to do, given the market environment today, is to do an investment to raise about $1 million to $1.5 million. So you can call it whatever you want to, pre-A, late seed, I don't know, whatever you want to call it, doesn't really matter in my opinion. And if it's a Series A or a pre-A, it will have a valuation decided on by the lead investor. Our previous round was a convertible, a safe note with a 25% discount on a 20 million euro cap.
What valuation are you putting on the current raise, 1.5 million?
So that will basically depend on the lead investor. We've got a follower out of Europe that's interested, but waiting for a lead investor. I'm talking to a few lead investors now, but basically I want to increase my reach.
What valuation cap would you put on the safe note for that until the lead investor comes through?
If the previous one was 25% discount on a 20 million euro cap, it all depends on, I'll take whatever I see is out there, and I'll decide what is the best one. I'm not dictating what is the cap or what is the valuation before I get the investors to lead, or unless the person wants to go into a convertible.
Right. Okay. That makes sense. So what FDA path exactly is this you're using? Is it a de novo or what exactly?
So it will be a 510K according to the regulatory assessment we got out of a company called Micra. I don't know if you've heard of them, MCRA.
Okay.
They're a company that worked very closely with Bayer, recommended by Bayer to us. Like a lot of these top tier 1 companies, a lot of people, previous ex-FDA, they're also based in Washington amongst the rest. And that was their assessment, 510K de novo.
Okay. All right. That makes sense. No, that sounds like you have a good tool there, good product. We've worked with a number of Israeli companies before. Like I say, the challenge has been engaging with our investors from Israel as the time zone difference makes it a little bit tough. And if you have to go meet with people, it's a flight from Israel to the US. And in anything over 200K, I find is a flight. But if you're familiar with that and you're ready to do that, I lived in Israel for 2 years, 95 to 97. So I knew the challenge of flying back and forth. It was a thing. So, and usually people have somebody in the U.S. on the ground in the U.S., a small apartment in New York or Boston.
We haven't got anybody in the U.S., but I think we've got people in Europe. But at the end of the day, if we arrange a group of investors that are serious about investing, I have no problem hopping on a plane and coming and doing kind of a mini roadshow with these investors as well. So
that's good.
The big question here is, at the end of the day, you said 3K for 3 months, if I understood correctly.
3K per month for 3 months. So it's 9K for the first 3 months. And then some people get it done in 3 months. Others have to, especially if you're starting a $5 million raise, like many people do in this space. 60% of our deals are life science. So there's many of those. That's 6 months, easy to start making a full dent in that. Today's market's a little bit tougher than it was 3 or 4 years ago. Valuations have to be more market realistic and people have to be more negotiable. But if you're in the right place with the right product, a lot of AI-enabled technologies are doing very well. Don't know if AI is part of yours, but if it is, I'd make sure people know that up front, that you are in that world, because that's a growth strategy for sure. A lot of biomarkers are being done with AI tools, even without an FDA path, to get out there and help with drug discovery. If you have the value of that is if you get out and have people start paying you $100K a year for your platform or whatever, it just gives validation that you're in the right place or paying money to get your data. That's a big signal to the investor. But so we can talk about that if you sign up, how to make sure we get the value props out to the marketplace that we see today.
So 2 questions. I wasn't clear on the first one. The fact that we're not targeting the FDA at present, how will that affect the raise in the U.S. investors?
Well, almost everybody in our program in life science are on an FDA path. And what the investor wants to hear, especially the angel investor, is that after this raise, you don't have to raise too much more money and you can get to FDA approval in short amount of time, 12, 24 months. These are the things they want to hear. What they don't want to hear is we need 7 more years and $50 million more, because they'll get diluted out. And those are tough to do, especially in the oncology space where it's just so expensive. But for deals that we are getting from point A to point B in 12 to 24 months, we need $1 million, $2 million, $3 million. This is a very viable path. And there's a lot of people that are very interested in it because the outcomes in this space are very, very good. Exits are tremendous in this place compared to tech. So yeah, we and like I say, 60% of our deals, the 2 things that do well now are biotech and AI. Yeah, those are the 2 things that are getting funded with relative ease. Everybody else is having a harder time.
It'll take me about 3 years to get the FDA because I have to do more data collection there.
36 is not too bad. The thing you want to show is that it's a very known path. It's very well figured out. We know exactly what we have to do, exactly what we have to raise. There's no mystery. There's no risk. We talk to the FDA. We do this, we get that. This is the message we have to get off there. And then there's an exit. If we're going to get it to FDA approval and sell, who's going to buy it? And they want a very, very strong exit. We've talked to them. They've given us LOIs. They've given us numbers. They've given us exactly what we have to do. It's very, very well known is what investors want to hear.
Yeah, I think we still need to do more work in the US on that, but definitely we got our partners outlined already. We're talking to some of the strategic companies that can either be partners or exit strategy for us. Can you say a few words about your track record, a bit about success, maybe in the field of AI in the US now, maybe even more specifically in the field of cardiology, if you've got anything?
Well, we have a number of cardiology deals going through our program. We have Amplify, we have Capella, we have Windmill. Those are different elements in the cardiology space. Some of them are making use of our physician program. We have physicians who do advisory work. We sign them up. They give us evaluations. We do surveys and they give us their feedback. And so we get a written document that says these physicians looked at it and they say, this is a great thing. having our next event on December 6th. It's going to be 5 to 7 p.m. in the evening, midnight to 1 for you if you wanted to see it, or get the recording later if you like. But the idea is we're working with Angel MD, which has 25,000 physicians on the platform. And we're going out to recruit physicians to come in and become evaluators, so to speak, of those technologies. Those three companies are going to pitch and get the evaluators. And then some want it because they want to raise money. Some want to use it for the FDA path. Some want real advisors to come in and coach on design and structure and so forth. So there's lots of reasons why people want physicians. Everybody has 5 to 10 physicians on their cap table already when they come to us. And they're great investors. So it's certainly worth doing that. So building these evaluation or surveys, it depends on how big they are. It can be a nice thing. And that's part of what we do. You come and join our program, we'll help you build one of those packages as well to take out. And then you get access to a large number of physicians in the US. If you need to build up that community, we can help with that. So some of the evaluators turn into investors. Doctors who are looking at the report become investors, and then we go out to angels and say, well, this is how much money the physicians have put in. How about you? And if it's more than 200 or 300K, then usually the angels are jumping on board that pretty quick, because that shows real value validation. Overall in our program, I would say about 70% raise funding, 30% don't. The 30% that do not do so for one of 3 reasons. Number one, they have a valuation that's out of market. We just think we're worth $70 million, but we can't really tell you why. 2, there's something wrong with the deal. We're missing something key. You have to step out, go fix that, and come back. Something wrong with the team, or there's a lawsuit on the books. We have to go clean that up before we're going to go and put money in. And then 3 is lack of follow-up. We generate introductions, make the introduction, and then a month later they're saying, "Oh yeah, I need to call that guy back." Well, a month later, we're kind of starting over again. We didn't pick up the dialogue and carry it forward and build a relationship and go and close them. Again, 25K check can be very transactional. More than 50K is usually not. It's more relational. So we have to be in there really knowing how to close. So the ones who do well are the ones that are raising money halfway through the raise. They need more. They've run out of investors. That's when they come to us. So if you have other investors to go to, by all means do so. But if you run out of investors, we're a good place to find more.
Got you. And how long does it usually take to close about $1 million to $1.5 million, would you estimate?
It'll take a month to set it up and get it out there and build the list, and then another month to get through diligence and so forth. The third month, if things are going well, you can start picking up a lot of that. In this market, it could take longer than a month to close $1 million, $1.5 million. Now, you could get a fund that's going to put in $1.5 million and you're done, but usually we're going to 3 or 4 investors, so it's going to take time to go through. So 4 or 5 months is what I would think that would more likely be, just because it takes some time. If your campaign goes over the last 2 weeks of December, we automatically give you 2 weeks on the end of the campaign. So if you sign up and say, "Hey, I want to do this," you put the payment in. Next day, we'll have an onboarding call. 1 week from then, we want to mail out the intro mailer. So let's set ourselves a 1 week deadline to get that done. It's not hard, but we just need to prioritize it. Get it out there. It takes a week and a half to go through all the lists. We have our initial list, and now we invite them to come to the events. We start going to events then. So it's a pretty fast start. Typically, you have the deck ready. If you need help with that, we can help upgrade the design. Sometimes we do that. It takes 2 to 3 days, but we pay for that. There's no cost to that. I just want to give us the best possible pitch as we can. I've not seen your deck, but typically, if you raise money, this much money, then you probably have already got a pretty good deck together on it.
Yeah, we got a good deck. And your success rate there?
Well, I call it 70% of our clients raise money, but 30% don't, for the reasons I mentioned. One thing we do is we calculate a campaign score. We give you points for things you do. You come to events, you pitch, you follow up, you give us updates, you get points. When you get to 100 on the campaign score, 90% have raised funding. So people that go through the process and really stay with it and do a job, they get money. Those who can't quite figure out how to show up to the event or can't quite prioritize follow-up to the investors, they struggle in raising money. Of course, if you stay in long enough, you will, but it is $3K a month. So we have to think about that.
Okay, great. Well, we're watching cash now. Of course, naturally, due to the thing, I think good to understand the process. Let me give it a bit of a thought, because we're a bit watching it tightly now. We're waiting. We've just won the competition in Singapore, so we should be able to get some money, and hopefully that will facilitate things. So let me give it a think, and I'll get back to you then.
Sure. So I'll send you an email about how we work and sign up. I'll send you a campaign proposal probably tomorrow. And with that, you should be able to take it to your team and decide what you can do with it and go from there. Did you have any other questions for me?
I think I understood it in general, your experience. How many companies to date have you actually worked with?
To date, you mean currently in our program or since the inception in 2009?
Since 2009.
Probably 600-700. Now, once upon a time, we would charge $500 a month, and we would have 40 to 50 companies in the program running, and we were just giving them the leads. We've since grown the program quite a bit. We now charge $3,000 a month, and we have no more than 25. We're at 24 right now, and we'll probably be down to 22 at the end of December, and then back up to 25 and sometime in January. So we only take on so many clients, but we've been doing this since 2009, 12. So hundreds of companies have gone through, and the program has changed over the years a little bit from what was originally a mailing program to an investor relations program. It's grown up a little bit. In the U.S., I'm finding a move back to in-person. We're actually shifting more to in-person events going forward because people want that. And I found somewhere along the way there needs to be an in-person discussion to close if it's over 100K or more.
One meeting is fine, but if I have to find myself meeting a guy that wants to do $100,000 check 3 or 4 times, it's a bit of a complicated. So what's the average about once towards more closing and to give the final push is enough, or do you think it's going to need more than that?
Well, I think you can make one trip and go around and meet people. It's like a week you spend in the U.S. and you go to New York and then you go to Bay Area, you go to Chicago, go to L.A., go to Austin. These are where the clusters are. So in the cities, you can make a tour around to meet people and close in one go. In that case, you just have to be careful, organize it that way, where it's going to be a worthwhile trip. 1 week across is probably a meaningful trip to do. And you may have other reasons to come to the U.S. as well. A lot of people are trying to sign up more partners like Mayo or more exits like Johnson & Johnson or whoever your exits are. So if you put all those in one trip, it would be a meaningful trip in that case.
Okay.
All right. So much for taking time.
Likewise. Thank you. Have a good day then.
And there you have it, folks, a deep dive into the dynamics of startup success and investor strategy. I trust you enjoyed uncovering the secrets before 10 Capital's unique approach and our guest's groundbreaking work in vocal biomarkers. Before we sign off, let's recap. From curating a community of investors and hosting pitch events to helping startups with angel group applications, 10 Capital is your go-to ally in the fundraising journey. A special thanks for joining us today. If you found our insights valuable, hit that subscribe button for more industry wisdom. Until next time, this is Halty Martin signing off. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.